Yo, what's going on, guys? Alec Demsey, just going over a little psychology and trading psychology. The date is November 28th, 2016. It's about 9:15 Eastern. And really, the biggest thing why I want to do this webinar was just to put everybody and give everybody, that kind of mindset, shift your mindset a little bit off of trying to learn everything about the markets, because when it comes down to it, markets are $5.3 trillion a day. We're not going to learn everything. We're not going to, ever know enough to, become 100% consistent and, win every trade. And when it comes down to it, that's what every trader, or not every, but most traders really want. They want that 100%. They don't want to lose a trade. But when in reality, that's just not possible. And that's something that, I've learned in the past, 4 to 6 weeks. A little bit about myself. I started trading back in October 2015. I got into a mentorship with Daniel, and he was developing an automated software trading system. So basically like a robot, like mirror trader type thing. So I got in a mentorship with him. Never really thought much of trading up until March or April came around, when I moved back home. I was down in Florida when I met up with David. I was playing hockey. I was really busy with hockey, really busy with work. I know, not excuses, but my mind just wasn't there. I really wasn't, focused on trading. So when I came home in, about March, I got home early March and went back to work. I was working outside, working in 30, 40, even 20-degree weather a couple of days, early in the morning, snow on the ground. I'm from Ohio. So it really got me thinking, like, damn, I don't want to do this for the rest of my life. I don't want to be, sitting here, 40 years from now working, 40 hours a week to retire 40% of my paycheck, when, like we go over all the time, it's not even 40 hours anymore. It's more like 50, 60, 70 hours. So that's when, March, April came around, and I really absorbed myself into trading. Now, what happened at the early beginning is I did what 99% of traders do, and I fell into the trap of trying to learn everything about the markets, trying to become so certain. Like I failed so many times. I've lost about $2,000 in the market when I started out. Now digging out of that hole since I got my psychology down finally, about a year later. So that's really where I want to help, is basically take you guys from, thinking that the market and looking at the market is going to give you all the answers, to really all the answers are being in yourself. So basically, there's a few big points I want to get on, and I'm going to continue to do a lot of psychology webinars. I actually want to get like a weekly schedule down to do psychology webinars, and even maybe 2 or 3 times a week, because psychology is so crucial to trading. And that's what so many people don't understand. We always hear, oh, trading is 90% psychology, 10% technicals. But in reality, most people study 90% technicals and 10% psychology, or not even that. I was actually talking with somebody the other day, and, him and I have both been struggling. Like I said, both been struggling with trading. And I asked him, I was like, man, like I took a step back the past 4 or 6 weeks, developed my psychology. And I asked him, I was like, yo, over the past couple months, 7, 8 months, because him and I really got into trading right around that March, so about 7, 8 months now. And I asked him, I was like, over all that time, how many hours do you think you've spent studying technicals? And he said thousands of hours he spent, studying technicals. He told me his first week into trading, he went through 68 hours of videos all over technicals in 1 week. There's 168 hours in a week, and 68 of that was spent on studying just technicals. So, and then I went and I asked him, I was like, all right, so you've spent thousands of hours studying technicals. How many hours have you spent studying psychology? And he said, not even 10. So, I want to really right here from right now, basically get you off that mindset of technicals are going to give you the answer, because they're not. Technicals are not going to give you the answer to becoming consistent, which is what we all want, because anybody can go out there and put on 5 winning trades in a row, but then lose it all the next 5. You know, we want to be able to have a sample size that's large enough. You know, I know we all, you know, graduated from 6th, 7th grade science when we were talking about sample size. And basically what we want to do in trading is create a probability with large enough of a sample size that we create consistency. Now, that consistency won't always be, you know, if we take 5 trades, 1 and 2 are going to win, the third one's going to lose, and then 4 and 5 win. You know, we might go 5 for 5, and then 3 for 5, and then 0 for 5, 0 for 5, 0 for 5, and then 3 for 5, 3 for 5, 4 for 5, 2 for 5. You know, that's what's crazy about trading, is it's so random. And that's, you know, basically where we have to look. Trading is such a paradoxical environment. It's all paradox. So let's compare trading to a casino, right? How is it that a casino on such a random outcome is able to produce such consistent results? Because on average, a casino on any given day, week, month, year, 10 years, whatever it may be, a casino earns about 4.5 cents on every dollar. Now, that may not seem like a lot, but if you go and, you know, over the course of the year at a casino, over all of their blackjack, let's just use blackjack for, you know, the sake of the example, if over that year, if $100 million are spent at that casino, then that casino just netted $4.5 million in 1 year off of just its blackjack tables, let alone poker, craps, all that other stuff. So how is it that casinos with a random outcome are able to produce consistent results, but with trading, what we see are consistent outcomes, but not consistent results, but random results, right? So basically what I mean by that is if we go and, you know, I'll use support and resistance, for example, since, you know, hopefully everybody that listens to this knows what support and resistance is. And if not, that's fine. You know, it's no big deal. So if you're going and you take, you know, 10 trades based off of support and resistance and only 8 of them win, then, you know, you just created an 80% probability, okay? And then creating that sample size, going from 10 trades to 100 trades, and then maybe you go 78% of those win, or 78 out of the 100 win. So that's really what it's about, is thinking in probability and giving yourself an edge. And what I mean by that is taking support and resistance. I'm an Elliott wave trader. I like Elliott wave, harmonics, point and dash. There's so many thousands of ways that you can examine the market, and you want to take that edge and apply it to every single one, every single trade that you see it on. When you have, you know, the best traders in the world, they don't pick and choose their trades. If they see the trade, they make it without thinking twice about it. Why? Because they're so certain about being uncertain. That's probably the biggest key that I have learned in the past 4 to 6 weeks. You have to be so certain about being uncertain. What I mean by that is there's 2 ways that the market can go, up or down. So you're either profiting or you're taking losses, okay? There's no other way about it. That's exactly how it goes. So let's think of it like this. Let's take a coin, okay? And when you have that coin, there's 2 ways. So basically, you have to decide which way you're thinking it's going to go, but you want to use a probabilistic outcome, you know, a pattern. So maybe a pattern shows up where 3 out of 5 times it's heads. So you're like, okay, out of 25 times, you know, it'll be 15 heads or something like that. You want to create that probabilistic outcome because that edge is what will provide consistent results. You're not picking and choosing, like I just said, the best traders take every single trade that they see, and the other thing that is so big with, being certain about being uncertain is the market will go whatever way it wants to go. You have to take the information that the market's giving you and not feel threatened by it, because if you were to just sitting there and you didn't have any money in the market, then you wouldn't feel threatened. So why is it as soon as you put money in the market, you're starting to feel threatened? Because you're emotionally attached. So you have to take that emotion out, which is so hard to do. You have to rewire your brain, because we are, you must train your brain to be in the now moment. Okay. And what I mean by that is whatever the market is doing now, you have to be reading that information and then making a non-biased decision from that. You have to be in the flow, so how is it that fish or birds, when they're swimming, flying, whatever, how is it that thousands of them at a time can make the same exact left turn? It's like they're just wired all together. Okay, so that's essentially what I mean by that opportunity flow. You'll sometimes feel it in the market when you're in the flow. So you have to train your mind to think in that flow and that now moment. Now, why is it such a universal problem that we're not? Because it's how our brains are wired and our social upbringing. We have been taught so much, again, that is such a paradox to what trading is. Like, so many things about putting in hard work and, studying and, learning the material. It's not that. It's more about learning about yourself. Okay. So another thing that I'm going to hit on is basically when you're coming up to a trade, you cannot allow your most recent trades, your 2, 3, 5, 7, 10 trades to affect whether it's a euphoric feeling or a negative feeling. You cannot allow those past trades to influence your edge. What I was just talking about, basically, whether it's Elliott waves, support resistance, trend lines, whatever it is, you cannot allow those trades, those previous trades, to affect that edge. Reason why is because every single moment in the market is unpredictable. It's uncertain. Goes right back to being certain about being uncertain that anything in the market can happen at any time. Now, why is that? So when you're trading, right, I can move the market in any which direction. Why is that? Because I get paired with another trader. Okay. When I go and I execute a trade, him and I or her and I we're connected. Okay. We take the opposite trades. So what I may think is high, he or she may think is low. What I think is low, he or she may think is high. Okay. So then if we take that opposite trade and then he or she are no longer like, oh, I'm not confident in this, and they pull out, and then my trade can then influence the market, can have a much greater influence on the market. So that's how, really anybody is able to influence the market. And that's why you can't allow your past 2, 3, 7, 10, 20, 100 trades to influence your next one. Okay. So what you have to do is basically just take yourself out of whatever has happened in the past. If you're on 1,000 trade win streak, you cannot rely on it being 1,001, because there is no certainty that it's going to happen. And that has been one of the hardest things. So you have to develop a strong, virtually unshakable belief in being uncertain in the outcome with an edge in your favor. Okay? Again, you have to be so strong. You have to have such a strong, virtually unshakable belief in an uncertain outcome, but you have an edge in your favor. Okay? And again, that edge is whatever you decide it to be. That is when you get into your technicals, whether it's Fib, again, Fibonacci, Elliott wave, support resistance, trend lines, point and break, like there's so many, okay? Whatever it may be, that's when you then go and develop your edge, okay? And just like we went over, your edge, you cannot pick and choose, because if you're at a card table and you're playing poker, you don't get to pick and choose what cards you get to play. You get dealt the hand, okay? You have to play the cards that you are dealt, and that's exactly how it is with trading. Trading and gambling have so much in common, so much. It's absolutely unbelievable. Again, why is it that casinos are able to produce consistent results on a completely random outcome? Because they have an edge in their favor. They know that if players play by the rules and the rules that are given in the game, again, whether it's poker, craps, blackjack, whatever it may be, for each game they have roughly a 4.5% leverage over the player. That accounts for all win streaks, all losses, everything like that. So as a trader, you have to develop that edge, okay? And how do you do that? Again, that's where your technicals come in, but your psychology has to be behind it. You have to be able to essentially take a loss, when to take a loss. You have to know when, and that's another thing I'm about to get in real quick, is basically risk, because risk is so big. But you have to essentially know when to take a loss. You have to have a plan for when to take profit. You know, for me, if I'm on a 15-minute time frame, an hour time frame, a daily time frame, what I do is if the trade goes in my direction, then I move my stop loss to the third highest or lowest. So say if I'm going to sell and it goes, you know, 1 bar down, 2 bars down, 3 bars down, 4 bars down, the most recent 3, I'll place my stop loss above that third one, okay? So it's protecting profits. You have to have a strategy in place of when to take profit, when to get out of the market, and not think twice about it, okay? You know, like today, I did that with my stop, and I made, you know, about 6.5% on my account when I was up nearly 40%. Now, why am I not pissed about it? Because I was letting my winner run, and then I was just moving my stop up. I was just going to let the market do what the market was going to tell me it was going to do, because I have no control over what it does. The market's going to do what it does, okay? So the next thing that I want to touch on is risk. Okay, so we all think that because we're traders, we're risk takers, but do we actually understand what that risk entails? We got about 10 minutes left, so I'll hit on risk real quick, and then we'll call it a day. So basically, risk was one of the hardest things for me to understand also, along with being certain about being uncertain. Risk was so hard. So risk, just because, you know, you place a stop does not actually mean you understand what is at stake. I used to do that all the time. I would go, I'd place a stop, I would move the stop as it kept getting closer, or, you know, if I got stopped out, I would be pissed. And, you know, so many lessons about getting stopped out, losing money, and just, you know, being wrong. So essentially what risk is you are getting, the market is basically going to tell you if you're right or wrong, and you have to accept the price tag on how much you're going to accept for being wrong. So you have to say, okay, if I have a $500 account and this trade goes $25 against me, then I am completely fine with losing $25 and finding out I was wrong. Okay? That's essentially what risk is. You have to predetermine that. Every single great trader. I was talking to a market maker a couple weeks ago. He gave me this tip. You know, every single great trader that he's ever traded with, he traded gold in the 3 major places that gold is traded: London, Singapore, and New York. Those are the only places that gold is traded on a floor level. So the guy knows what he's talking about. Every single trader that he met, they knew what their risk was. They knew going into each and every single trade what they were willing to be told they were wrong in what the price tag was. Okay, because again, we go back to earlier with anything can happen in the market at any single time. Again, if I'm traded up with a trader, or if I'm partnered up with a trader and he or she backs out, then my trade can influence the market one way or another. Okay, and that is the power that essentially virtually everyone has. Whether you're some small retail trader or you're a big bank trader, everybody has power on the market. Again, that's another paradox, because I said earlier, I have no control. But then I just said everybody controls it. So that's what I mean by trading such a paradox, and that's, you have to let go of those kind of things. We're often taught that, find out, everything about everything, figure everything out, and we just have to let things like that go. Detach ourselves from those outcomes, detach ourselves from that. So every single trader, every single great trader has a predetermined, stop or what they're willing to risk. Okay, so you have to come up with a way of determining with your edge what you're going to be told is, or how much you're willing to pay to be told that you were wrong by the market. That's crucial part. That and when to take profit is crucial parts of when, or of what to have with your edge. Okay. Again, for those of you that miss what I mean by edge, it's basically whatever your trading style is. Support, resistance, trend lines, Fibonacci, Elliott wave, whatever it is. That's what I mean when I say your edge. So, and why do I call it an edge? Because you're creating the probability to become consistent, because it's a probabilistic outcome. Okay, you're not going to win every single trade. You're not going to lose every single trade. Okay, it's just not how it happens, but you have to go ahead and put the probabilities on your side so that you can become consistent. Okay, so with that, I really don't have, I do have a lot more actually to go into, but I'm going to wrap that up. We basically went over, getting that probabilistic mindset, being certain about being uncertain, and what exactly risk is. So if you guys have any questions, feel free to Facebook, Instagram, whatever, Alec Demsey again. I will be, more than glad to help. I'm still studying psychology every day, hours at a day. I listen to Trading in the Zone by Mark Douglas, and I'm going to start listening to A Disciplined Trader as well by Mark Douglas. For those of you that don't know who Mark Douglas is, he's one of the most known traders for psychology and teaching other traders and large banks, large businesses, everything. He created his own consultation firm to basically give everybody that psychology to become profitable. So basically what he says is, if you don't have the psychology down, you will not become profitable as a trader. It's just how it is, just how the market goes. So guys, with that being said, does anybody have any questions? Awesome. Again, if you guys need anything, feel free to shoot me a message. I will upload this. I can send it through email, whatever it may be. Until then, have a great rest of your night, and I'll see you guys all soon.